fact, I was speaking to a very large bank this week with their desire to see how they could enter the DeFi market from their position. They won't go in without being thoughtful of how to do that, but it's something that not just this bank, but many other banks, exchanges.
I have heard from some tier one banks that they may issue their own US dollar stablecoin, and hard for me to predict how that plays out.
Yeah,
but that also is evidence that they're leaning in a way they haven't before. And again, if there's one thing I would emphasize to this audience, we are underestimating the tailwinds from the shift of the last 6 months. The largest economy in the world has been quite hostile to our industry and is now moving the other direction quickly. And I think we underestimate those tailwinds.
Yeah, absolutely. I totally agree with that sentiment. And it definitely feels underestimated.
I think I want to pause it there. That was a really good statement. We're sort of underestimating the tailwinds that have been building up. That means the things supporting the crypto ecosystem over the last 6 months. So I think I'm going to start it there. What's going on, everybody? Welcome back to another CYPRX video breakdown. We have over 1,100 listeners tapping in today, so really do appreciate you guys for coming out and tapping in with me. We got a lot of juicy alpha to cover today. Shout out to the CYPRX research team for dropping all day one and day two digital asset summit before it really reached the mainstream herd. We were watching some of these video breakdowns when they had 20, 30, 40 views in the CYPRX private Discord. Shout out to you guys. Today, we are going to be talking about and taking a look at the current market environment. So kind of just going off of what Brad just said, how there's a whole bunch of tailwinds in the market supporting the crypto ecosystem that the market hasn't really been able to price in yet. We'll get into that in just 1 second. People are underestimating that, thinking that we're in some bear market cycle because the market's pulled back significantly since the beginning of the year. Despite the recent shift towards risk sentiment, we still need to keep in mind that institutional interest in crypto has never been higher. We're also going to be diving into how DeFi is evolving at an incredible pace. We're going to be giving you more reasons to start educating yourselves now on how to participate in DeFi, right? Showing you guys that from an institutional standpoint, these institutions, these large players are 110% jumping into DeFi head on. We're going to be looking at some groundbreaking fundamentals from R3. We're going to be listening to, I believe it's the CEO from R3, physically mention on a public media platform, say that he just discussed and talked to a large bank about onboarding into the DeFi ecosystem. So I want to play that for you guys. So we're going to be exploring in a nutshell some major milestones related to XRP and the XRPL. I want to discuss some big announcements from R3 and cover compliance and real-world / DeFi developments on Aptos. And then we're also going to be examining some collaborative efforts between large banks, some regulatory bodies on the XDC network, or excuse me, that involve the XDC network. And really just emphasizing that even during this market downturn, crypto continues to grow, especially in DeFi, which is a niche, and our personal opinion here at CYPRX and in the Wealth 28 Club, that you do not want to be ignoring, all right? So hopefully you guys enjoyed the little tiny first part of today's video breakdown, just playing the Brad Garlinghouse interview at the Digital Asset Summit 2025 in New York while I was finishing my meal, and just kind of picking up where he just kind of left off, right? So I posted this out to you guys and I said, is it time yet? We made it. Unfollow everyone who doubted that XRP is a security, that the lawsuit would never end, or that they will be dead before XRP reached $3, which we obviously, of course, accomplished a couple months ago. Remember in financial markets that patience and deep research pays. Yet most choose to follow blind ignorance and idiotic opinions. Do not get distracted right now by outrageous overnight price predictions. The strategy is simple. Continue to stack when prices are discounted and continue to have a long-term vision. The bottom line is that the financial transformation is happening and Ripple and XRP are going to play a major part in it. All right. And so again, picking up where Brad Garlinghouse kind of just left off, telling you guys that, there's major tailwinds in the market that haven't really been priced in. The biggest economy in the world, right, coming in and onboarding into crypto, or the government of one of the largest economies in the world backing crypto for the first time ever, especially from a political standpoint. I said to you guys here in this post, this is really in depth and really, you know, it takes logical thinking, critical thinking to digest information like this. Is the type of stuff people don't really want to hear, but it's necessary for you to understand, especially if you want to be a long-term market participant, the things that create a risk-on, risk-off market mood, which is something that we focus on very heavily here publicly for the CYPRX community, and then also in our private community, giving fundamental Zoom call breakdowns, hand-typed out reports, and giving institutional insights on market sentiment. So I said here for you guys, just to cap on what Brad just said, understanding crypto's recent struggles, a reality check. It's unfortunate that many are ignoring clear market signals, relying on outdated narratives when they have a supercomputer at their fingertips. The reality is that crypto is not broken. In fact, it just survived one of the largest hacks in crypto history, and its infrastructure, regulation, and institutional backing, and even government support have never been stronger. So what is weighing on the market sentiment right now, and what has recently weighed on price action? Key macro factors at play, just to name a few. This is not everything. This is just everything in a bundle that I wanted to give you guys in a short, complete post to kind of overlay what's been going on. Interest rate expectations shifted at the end of 2024, specifically at the local top on December 18th, which anybody can go and look at. If you look at the total cryptocurrency market cap, including Bitcoin, you can see this clear as day. This aligned with Jerome Powell scaling back rate cut expectations at the December FOMC meeting. Markets went from pricing in 4 rate cuts in October and November in 2024 to take place in 2025 to just 1 to 2 cuts in 2025 after the December 18th meeting, which removed a major tailwind, i.e. support for risk assets. Number 2, we've recently had global risk-off events fueling safe haven demand. Gold recently just hit a new all-time high. This has been primarily due to rising recessionary probabilities of anywhere between 30 to 40% chance of a recession in 2025. Tariff wars between China, the US, Canada, Mexico, the UK, EU, just to name a couple of jurisdictions, which have created a level of uncertainty around inflation and economic growth. We've also had escalating geopolitical tensions in Russia, Ukraine, surrounding uncertainty around peace agreements. And then most recently, we've also had Israel's large-scale attack and offense on Gaza, ending a 2-month ceasefire, further destabilizing in the Middle East, right? That's as obviously, of course, as of recent. And number 3, I included here, the yen carry trade unwind, which a lot of people don't even know exist. And is one of the primary reasons why risk assets have been bullish since 2022. The Bank of Japan recently is expected to hike rates 2 to 3 times this year, which has strengthened the yen and is obviously, of course, a safe haven asset coupled with gold. A stronger yen unwinds carry trades, triggering sell pressure across risk assets like crypto and equities. Meanwhile, we've also had weaker U.S. economic data as of recent, which has reduced the U.S. dollar's attractiveness, further complicating market flows. So what does this mean for crypto? Markets temporarily could remain suppressed, sideways, or even continue to see outflows if these uncertainties that I just listed above persist or worsen. Could it at least end in an extended period of time? Again, that people aren't really mentally prepared for and financially prepared for? Yes, it could. But let's be clear. This is temporary. And that's the one key takeaway I want you guys to kind of leave with this post. Long-term sentiment remains bullish. Institutional adoption is at its all-time high. More regulatory clarity and positive government involvement than ever before. Momentum in crypto adoption is accelerating even during this downturn. So the bottom line to end this is prepare for short-term pain if tariffs and geopolitical risks continue to escalate or recessionary fears intensify, creating more demand for safe havens. But over the long run, crypto's bullish trajectory remains intact. Once uncertainty fades, I personally believe and expect that another strong leg up in the crypto ecosystem will occur. Holy crap, that was a mouthful. Thank you so much for sticking around with me. Okay, so I want to dive into some of these bullish fundamental developments and not just leave you guys thinking that this is my opinion, because it's not. This is all fact-based research that I put out to you guys on X. Same with the CYPRX private research team, okay? So if we come over here, right, you got ignorant individuals like this, okay? They come out, they deliver their opinions on the internet. They say things like, this is literally the least bullish the market has ever been. Prices are trash with the best news ever. Things were better at the bottom of the bear market. Now, in terms of price action on certain digital assets, I agree 110%. I replied to this, however, by saying, but in terms of infrastructure, security, regulations, and institutional interest, actually, and statistically speaking, is proven that the market has never been or seen this type of positive momentum ever in crypto history. So I disagree with this individual here. And I'm not trying to call this individual out or anything like that, but this just goes to show a level of ignorance and lack of research amongst the vast majority of retail traders that exist on X right now, which I'm trying to get you all to avoid. So if we just take a look, since this individual mentioned price action, right? This is exactly what I'm talking about. Let's look at a few digital assets that here in the private CYPRX community, we were investing in like literally over the past 1.5 to 2 years now, okay? Just because the digital assets that you invest in are not performing well does not mean that we haven't experienced a massive bullish price action. Take XRP as an example. Okay, since the individual said that prices are worse now than they were at the bottom of the bear market, well, let's look at the bottom of the bear market. And last year, 2 years ago, 3 years ago now, it's 2025, 2022, right? XRP price is trading in terms of percentages from the bottom of the bear market to where it's currently sitting at now, over 772%. All right. Soy is another perfect example of a digital asset that we were investing in heavily, sub 50 cents. From that area that we were investing in the CYPRX private community, Soy did over 1,400% returns. And currently, where we sit at now in terms of price action is still up 600% from where it was at the bottom of the bear market cycle. OM or Mantra is another really great example. At the bottom of the bear market cycle, it was sub 50 cents and did over 200,000% returns from where we were dollar cost averaging in the private CYPRX community. So this is why I disagree with this individual that prices are crappy now, maybe on assets that you house in your portfolio, but don't speak for the entire market as a whole. Again, bringing opinions to the market instead of statistics and research. All right. So back to what I was saying and back to what Brad Garlinghouse mentioned about how there's tailwinds in the market, like institutional interest, one of the largest jurisdictions in their government backing crypto for the first time ever, especially from a political standpoint. I want to take your attention over here to this report that just released yesterday. Give me a second. Let me switch up real quick and let's go over here to these other tabs I have open. Bear with me. Okay, this is a report that was just released yesterday, the 17th of March, 2025. We're going to dive into this. This is going to back my claims that right now, institutional interest still remains at an all-time high, even given this most recent market correction that has nothing to do with crypto or a failing of the crypto infrastructure or hacks or security breach or any of that stuff, right, that we've seen in the past. It's primarily due to the risk-off sentiment that we've seen on a global macroeconomic scale, okay? This is from Coinbase in partnership and collaboration with EY. It's titled Increasing Allocations in a Maturing Market 2025 Institutional Investor Digital Asset Survey. Some of the things in this article are going to friggin' blow your mind if you're not already awake and aware to what's actually happening behind the scenes. Again, no retail perspectives here. These are all institutional insights. This is the type of stuff that you want to be diving into. If you guys don't know where to access this information, head over to cyprxtrading.com, tap into our private Discord. Every single tab, every single fundamental piece, every document that I'm going to go over with you guys is shared in our private CYPRX research chat. Hundreds of fundamental updates that are displayed and shared on a daily basis that never reach the mainstream. This is the type of insightful info that you want to be tapped into, okay? Not the basic, everyday, average retail herd mainstream info that everybody taps into on Twitter, okay? That stuff will get you lost in the noise. So let's read thoroughly through this. All the highlights that I have, maybe it's about 5 or 6 pages. I don't want to read the whole 34-page document. That'll take forever. So we're just going to cover a couple, all right? To better understand how institutional investors think about digital assets, including sentiment, allocations, future expectations, tokenization, and payments, Coinbase, in collaboration with EY Practice, conducted a survey of 352 institutional investors. So I would pay attention to what this report says. We surveyed only decision-making COOs, CEOs, and head of transformations with a mix of respondents who have and are currently invested in digital assets like crypto and stablecoins, and digital asset products, along with funds, trusts, derivatives, and those who have never invested, which is important. And this survey took place at the beginning of this year, January 13th, 2025 to January 24th, 2025, and was released just yesterday. So it's all relative and updated information, okay? Check this out. So the introduction to this report says, this is probably going to be the lengthiest part of reading this document. It says, institutional investors globally increased their allocations to digital assets this past year and intend to continue to do so throughout 2025. So anybody here that doesn't have more credentials than 300 and I don't know, some odd financial institutions that are sitting there telling you guys that institutions aren't going to reallocate to the space or increase their digital asset allocations, block and ignore them, because this report from financial institutions says otherwise. The outlook for 2025 reflects enthusiasm for both increased utility and expected regulatory clarity for digital assets, combined with an appetite for innovation in the areas of stablecoins, DeFi, which is important, and tokenization. The industry appears to be on the cusp of broad institutional support to enhance our financial system with faster settlement, the democratization of access to alternative assets, and increased transactional convenience. Smash that thumbs up button and subscribe, because I totally did not butcher anything in that entire paragraph. Let's continue. There are substantive reasons to believe in this bull cycle. The market is more mature and resilient. The introduction of ETPs for Bitcoin and Ethereum and other products have expanded market participation. And there is a positive outlook on the evolving regulatory environment across the US, the EU, and the globe. The underlying technology has also progressed in the past several years. Use cases have evolved, and transaction costs and speeds have become more compelling. This is exactly what I'm talking about. Nothing is wrong with crypto right now. As a matter of fact, it's performing better than it ever has in past previous cycles, right? With this as a backdrop, Coinbase and CYPRX conducted a survey of more than 350 institutional investors across the world and their sentiment, investment plans, and usage around digital assets, which was conducted in January 2025, post-election, but prior to the Digital Asset Executive Order. Excuse me. The survey reflects an institutional investor base that is ready to build on an already strong foundation and prepared as well to both broaden participation and expand allocations as global regulatory framework becomes clearer. That's important as well, considering that's something that the global blockchain leader at EY said in a panel discussion, which I'll play for you guys in just 1 second. To continue, this says, more than 3/4 of surveyed investors expect to increase their allocations to digital assets in 2025, with 59% of individuals surveyed planning to allocate over 5% of assets under management to digital assets or related products. Looking forward, surveyed investors noted that regulatory clarity as the #1 catalyst for growth in digital assets. 84% of institutions are either utilizing or expressing interest in utilizing stablecoins, driven predominantly by goals of portfolio diversification. 76% of firms intend to invest in some form of tokenized assets by 2026. We also expect to see institutional investors increase core allocations. That is important. Core allocations expand their holdings of altcoins and start to engage in more DeFi. That is massive right now. That last paragraph where it mentions both altcoins and DeFi, because we've been big advocates of trying to get you guys to see, tap into DeFi, start learning how to get your digital assets working for you. We'll continue to convey that here in today's video. All right. So as of January 2025, 86% of surveyed institutional investors have exposure to digital assets or plan to make digital asset allocations in 2025. Among these, 85% of respondents increased allocations to digital assets and digital asset related products back in 2024, and a similar portion plan to continue to do so. Now in 2025, 59% of respondents plan to allocate over 5% of their assets under management to crypto. Specifically says cryptocurrencies, doesn't say blockchain, AI, real world asset tokenizations. No, it specifically says to cryptocurrencies. That is huge. 73% of institutional investors currently hold one or more altcoins beyond Bitcoin and Ethereum, led by hedge funds at 80%. Then it says the percentage of respondents that engage with DeFi are set to triple. This is huge. Are set to triple in the next 2 years, from 24% engagement to 75% engagement amongst institutions surveyed. That is massive, which goes to back everything that we've been attempting to say, that DeFi is going to have a huge explosion over the next consecutive couple of years, considering that now the likes of Hedera, Stellar, XRPL, XDC, even Flare, all of them are all fixating their attention on the adoption of institutional DeFi. All right. I cannot stress enough, do not fade DeFi. To continue, it says, respondents overwhelmingly plan to increase their digital asset allocations in 2025, driven by expectations of higher returns compared to other asset classes. So when questioned, how did your firm's allocation to cryptocurrency and digital assets or related crypto fund products change in 2024? And here you can see some of the statistics. It says family offices and hedge funds are particularly bullish, with 25% planning to significantly increase holdings in 2025 versus 12% among other firms. Then here it says, which of the following do you consider to be the main reason to invest in digital assets? And 59% of the individuals surveyed said higher returns than other asset classes. Almost 80% of respondents here are expected, let me reread that. Almost 80% of respondents expect cryptocurrency prices to rise. Nearly 70% see crypto as the biggest opportunity to generate attractive risk-adjusted returns. That is also huge. I expect cryptocurrency prices to blank in the next 12 months. These survey respondents were asked to fill in that blank. You can see here 79% of these survey respondents said, when filling in that blank, I expect cryptocurrency prices will trend higher in the next 12 months, said. 17% of them said that it will stay flat and range bound, and only 5% of them said that it will trend lower. Thinking about the next 3 years on a broad spectrum, in which asset classes do you see the biggest opportunities to generate attractive risk-adjusted returns, were asked by this institutional survey. 68% of them said cryptocurrencies. I'll just read the top three. 40% of them said U.S. equities, and 38% of them said private equity. So it seems as though from these 350 surveyed institutions, over 68% of them view crypto as the best risk-adjusted reward return for your investment over the next 3 years. That is also, again, in my personal opinion, a huge statement. Okay. Now, talking about regulatory developments, okay, because here it says respondents expect increased investor interest in investment post-election, and they expect post-election regulatory clarity to be a major growth catalyst. So last but not least, it says, what do you think will be the next catalyst for growth of digital assets in the industry? 57% of survey respondents said greater regulatory clarity. So I'll pause and reading this right here, but that just coexists considering that this was in collaboration with both Coinbase and EY, something that Paul Brody said in this panel discussion. Take a second here and listen to what Paul Brody says. Let me just make sure that this is presented in such a way where you guys can actually hear the audio. Give me just 1 second.
Yes, right. This part of the conversation is called the Great Liquidity Reservoir, and I'm going to struggle to convey just how much capital there is behind this regulatory dam, because the numbers are just monumental, right? How much money is there? Well, let's start with the most liquid of the liquid, right? Bank deposits, stocks, and bonds. $400 trillion, right? Certainly more than my current retirement nest egg, and plenty of money to buy you a nice place in central London or San Francisco. Right, 400 trillion. There's another 379 trillion in real estate, right? Gold is 13 trillion by itself. And then you get to the entire crypto ecosystem is like 2.5 trillion, right? I'm not going to say all of this money is going into crypto, but quite a lot of it will end up in crypto, and a huge amount of it is going to end up in tokenized digital assets, right?
So I'll pause it right there. Again, that's Paul Brody, EY Global Blockchain Leader. Keeping in mind what he just said and taking into consideration everything that I just read from you from the recent report that they just collaborated with Coinbase on. Okay. So do you guys now see why, statistically speaking, and why, after having gone through research-backed fundamentals, why I disagree with opinionated based individuals like this that come on to my Twitter and say, oh, this is literally the least bullish that crypto has ever been. What are you talking about? Like, oh man, I feel so bad for people like this because they choose ignorance instead of diving into research and tapping into the supercomputer that they literally use to write this post with, and read documents and watch fundamental breakdowns and look at panel discussions and read documents from financial institutions. It gets so super easy. It's not even funny. Anyways, let's continue down the rabbit hole. Let me continue to show you guys some developments that took place within the last 30 days. So everything I'm going to show you guys is relatively fresh. So we're going to start here. This was posted by Virtune 5 days ago on their LinkedIn profile. Hopefully I'm not butchering this organization's name. So this fundamental piece is from the 13th of March. As of time of recording, it is only the 19th. So that means it's only 6 days old, okay? Now, the reason why this is so fundamentally bullish, in my opinion, is because, keep in mind, since early March, the crypto market has shed over $300 billion in value, a staggering pullback that shaked investor confidence. And despite this, the Virtune, again, hopefully I'm pronouncing that correctly, XRP ETP has defied the trend, surpassing over $110 million of assets under management, which technically proved investor demand for regulated XRP exposure. Okay, so let's go through and let's read this. It says here, March 13th, 2025, Virtune, a Swedish regulated digital asset manager and issuer of exchange-traded products, or ETPs, continues its strong growth trajectory across several markets and announces that its largest ETP, Virtune XRP ETP, has surpassed $110 million of assets under management. Since inception, Virtune has experienced rapid growth in the Nordic market, driven by its educational initiatives, regulated status, and commitment to transparency. With a strong focus on educating the market about crypto as an asset class, Virtune actively engages in retail investors, financial advisors, and institutions. The company has also swiftly expanded its product portfolio, which now includes 13 ETPs with a total of assets under management of $275 million. The company's largest ETP is Virtune XRP ETP, and it was listed on the NASDAQ Stockholm on July 2nd, 2024. NASDAQ, I'm not going to butcher this, NASDAQ H, so like I said, I don't want to butcher that name, on January 20th, 2025. And in 2025, Ripple invested in this product. Virtune offers single asset ETPs that provide exposure to a single crypto asset. Staking single asset ETPs that offer exposure to a single crypto asset also combined with staking rewards, and index ETPs that provide broad exposure to multiple crypto assets with monthly rebalancing. Now look at these ETPs, okay? Because keep in mind what this fundamental piece is saying, that the XRP ETP is the best performing one. They give you access to Bitcoin ETPs, Solana ETPs, Polkadot ETPs, Avalanche, Chainlink, Arbitrum, Polygon, and Cardano. And the top performing ETP says here, we are pleased to see growing investor interest in our products amongst retail investors and financial advisors and various institutions. And they're excited to announce that the Virtune XRP ETP has become their largest ETP and now serves over 50,000 investors. So yet again, another fundamental piece backing why I disagree with the fact that we're in an extreme bullish environment right now. However, temporarily, we're experiencing a pullback due to market uncertainties that continue to linger. All right. Moving on, this was another interesting fundamental piece. We'll actually dive a little bit into some DeFi developments. As you guys saw in the Coinbase and EY document, they specifically mentioned institutional interest in DeFi. This is exactly why we have been preaching in the Wealth 28 Club to learn about DeFi. That education is a must. Again, you do not need to go out, deploy your hard-earned assets into the DeFi ecosystem to read a document, to join a like-minded community, to tap into a mentorship program, to understand how to get your digital assets working for you, which is exactly what you should do, because that wave is coming. It's honestly already came, but it's going to continue to manifest at a very rapid pace. This is a document from the INATBA. It is a report labeled DeFi Self-Regulation, a proposal for the industry from February 2025. And it says right here, DeFi continues to be a new and ever-changing concept that needs to be understood well before it is regulated. As such, this report does a deep dive into what DeFi is today. So it's just going over what DeFi is. Again, this is a document that anybody can go and read upon to educate oneself on some of the developments in DeFi and what is happening and unfolding at a very rapid pace. And months ago, actually almost over a year ago, we posted this here to you guys where I said, last bull market cycle, XRP, I'll just specifically focus on XRP, had no DeFi, or at least a well-developed DeFi ecosystem helping boost momentum like ETH did. That is all now changed for the first time ever. You've seen nothing but DeFi developments on XRPL, obviously, of course, Stellar and Hedera. Buckle up, this ride will be different, utility bull run or not. The DeFi ecosystem alone on these three networks are about to explode in TVL over the next 8 to 12 months. We posted this for you guys back on July 15th, 2024. Just recently, on February 25th, 2025, Ripple put out the institutional DeFi roadmap on the XRP ledger. What's live and what's coming next. There's so many different developments happening on the XRPL surrounding DeFi, AMMs, institutional DeFi, enterprise DeFi, retail DeFi. You guys need to tap into this stuff, right? Talks about earning yield, DEXs, AMMs, all the requirements, KYCs, the the EVM sidechain, real world asset tokenization, right? Different dates that are projected to come into fruition over the next consecutive couple of months. I highly suggest you guys take it upon yourself and go and thoroughly read through this, all right? Coming over here, even at a recent interview on CoinDesk Live and another interview that took place at ETH Denver, David Schwartz specifically talked about how he thinks we're on the verge of mass adoption of institutional DeFi. Take a second here and listen so you all don't think that I'm just making this stuff up.
Your standpoint from building Ripple for so long, from going through the ups and downs at Ripple, being here today, what it means for you?
It's tremendously exciting. I feel like we really are on the cusp of the mass institutional adoption, both of DeFi and of other blockchain technologies.
Coming directly from the mouth of David Schwartz, I really think that we are at an inflection point of mass institutional adoption of DeFi and other blockchain technologies. That is huge, right? Considering that this was just uploaded 8 days ago and only has 228 views, hardly anybody is paying attention to DeFi developments on the XRPL or on any network, honestly, for that matter, because they think that DeFi is still some scam, when in reality, it's becoming heavily regulated. Financial institutions are adopting it at a very rapid pace. And again, so many people are going to get left behind thinking that they're going to sell for fiat in this next massive blow-off bull market cycle that we have, and then be able to enter back in at a discounted price. It makes absolutely no sense to think that after financial institutions come in, once this market surpasses 6, 10, so on trillion dollars, that you're going to get to re-enter back in at $2 trillion because the market has some drastic pullback. Again, to each his own. Do your own personal research as to how much money is about to flow in, but I highly suggest you start to fixate your attention and diversify some of your portfolio into learning how to get those digital assets generating you yield, passive rewards, whether it's through lending, borrowing, staking, liquid staking, being a liquidity provider. There's so many avenues of approach that you can take to just learn, okay? This was posted by Zonix. And if you don't know, or if you're not too familiar with who Zonix is a Silicon Valley-based global leader in bridging real-world assets to DeFi ecosystems through a robust, compliant, and interoperable infrastructure. And they just posted this literally the other day. If we scroll right down here, this is from March 13th, 2025. And it reads, Zonix plus XRPL, powering the future of tokenization and DeFi. The XRP ecosystem is entering a new era of DeFi innovation with AI-powered DApps and tokenization tools from XRP Turbo. As a pioneer in real-world asset tokenization, Zonix is already driving institutional adoption on the XRPL. Billions in tokenized assets across real estate, treasuries, and private equity, AI-powered green data centers, compliance-first tokenization enabling institutions to tokenize assets in days than weeks, deep liquidity solutions that bridge on-chain TradFi capital markets with XRP Turbo bringing AI and DeFi automation to the XRPL. The infrastructure for tokenized real-world assets is stronger than ever. So what's next? AI-driven tokenized asset management, seamless institutional and DeFi convergence, and on-chain capital markets powered by the XRPL. So again, this just goes to show that some of the info that we've been putting out to you all is coming into fruition time and time again, right? We don't just make stuff up. We do research here. We don't just put our opinions out on the internet. We told you guys last bull market cycle, there was no DeFi developments on the XRPL. That is all about the change. You see Ripple this year putting out a DeFi institutional roadmap. You see partnerships and collaborations with large companies and organizations to collaborate in the DeFi ecosystem and build out more DeFi capabilities on the XRPL. You cannot make this stuff up. Now, let me solidify all this. Some of the largest players in the game are fixating their attention on DeFi. So you guys, again, don't think I'm just telling you all to go pay attention to DeFi for no willy-nilly reason. This is from R3. For any researchers that are listening in on this call, or even anybody that's listened to previous researchers talk about this organization, you know how interconnected they are with ISO, with XDC, with Ripple and XRP, okay? This is R3, and they posted on their LinkedIn profile 4 days ago. The market for real-world tokenization assets is projected to reach $30 to $50 billion by the end of this year. Joining fintech.tv from the floor of the New York Stock Exchange, so this was on a publicly available platform, R3 co-founder Todd McDonald discussed how ecosystem maturization combined with increased regulatory clarities are driving institutional and DeFi demand. You see that right there, institutional DeFi demand. He said there is a desire to bring more real-world assets on chain. In particular, when you look at the volatility across crypto, they're looking for a differentiated asset, differentiated yields that real-world assets can represent. Keep in mind that keyword right there, yield. But they have to be brought on chain so that they can fit into the way that DeFi works, which is 24/7 and very interconnected. R3 is paving the way for tokenized real-world asset adoption across traditional finance and DeFi markets. So let's just take a second real fast and listen to what this gentleman here has to say so that you all can hear directly from his mouth that he just recently talked to a very large financial institution about onboarding into the DeFi ecosystem. Take a second here and listen. This is about a 5 to 6 minute long video clip. I'll play certain portions of it.
This morning, I'm joined by Todd McDonald, co-founder of R3. So Todd, thank you so much for joining me.
It's great to be back.
Well, first and foremost, let's talk about what we've seen so far in the first quarter of 2025. Hard to believe, but only a few more weeks left until we enter a new quarter. So what are you seeing when it comes to trends and developments in the tokenization RWA space?
So tokenization is a hot theme now, but it's been a theme we've been working on in R3 for the last 10 years. We've been involved in the tokenization of digital currencies for quite some time, and within real-world assets or digital assets, we have many projects like Six Digital Exchange and High Quality Liquid Asset Exchange that are tokenizing securities and equities and trade receivables. So this has been a theme that's been growing for a while, and in fact, you look across the networks that are on our software Corda, there's over 10 billion of tokenized assets on those platforms. If you take a look at what's happening in the crypto world, there's an increased focus on real-world assets, not only as a alternative to the on-chain crypto assets that are within DeFi, but also as a way to grow the overall on-chain economy.
And building on what you just said, there has been a lot of focus on crypto, especially given all the volatility we're seeing in the broader markets as well. But when it comes to crypto and DeFi, walk us through what you're seeing as we head into this year.
So DeFi in particular is incredibly exciting. So if you take a look at this on-chain economy that has grown up, stablecoins have gotten true product market fit within crypto, and they are growing. But outside of that, the next wave, what we're seeing from our clients is an interest in bringing true real-world assets into this on-chain economy. In fact, I was speaking to a very large bank this week with their desire to see how they could enter the DeFi market from their position. They won't go in without being thoughtful of how to do that, but it's something that not just this bank, but many other banks, exchanges, and
So I'll pause it right there. 2 key takeaways. I'm sorry that the volume on that was kind of crappy. This is from a website, a news website, so you can't really turn up the volume, so I apologize. But he specifically said, in particular, DeFi is very exciting. That is coming from, again, the CEO of XRP. He also specifically said that he just talked to a very large financial institution that is considering onboarding into the DeFi ecosystem. You cannot make this stuff up, and this is all relatively recent. So for anybody out there moving forward that says, oh, institutions aren't coming to DeFi, they're never going to earn yield on their digital assets, they're not coming. Stop listening to those people, okay? You really have to start to tap into this type of research because it is relatively available to anybody that wants to access it. You just have to know where to find it. You got to stop thinking that Twitter and YouTube are the only sources of information in this crypto game, because it's not the case. Okay, start paying attention to the leaders that are literally driving the adoption of this space and what they're saying, and that's how you're going to win long term in this market. All right. Moving on, we have two more fundamental developments from XDC Network and Aptos to cover that have taken place in recent times. So this was posted by Mark Callback only 2 weeks ago on his LinkedIn profile, and it says here, the ITFA is a great organization helping provide involved in trade finance, stay connected and educated. So if you guys are not too aware, for those of you all who are listening, does not know what the ITFA is, I'm not going to do a full entire breakdown on that. Long story short, International Trade and Forfeiting Association, ITFA, is the worldwide trade association for companies, financial institutions, and intermediaries engaging in global trade, forfeiting, supply chain, and receivable financing. All right. They were established back in 1999, right? Long story short. Okay. And they just put out this fundamental piece. This is only from 2 weeks ago. And it says here, the ITFA launches in Latin America Regional Committee to strengthen regional trade finance. This just goes to show ongoing regulatory developments and compliance measures that are taking place behind the scenes that involve organizations that we pay heavily attention to here at CYPRX, like the XDC Network and Zinfin. Okay, it says here, the International Trade and Forfeiting Association, or ITFA, is pleased to announce the formation of the Latin America Regional Committee, or LARC, marking a significant milestone in the expansion of trade finance across Latin America. The ITFA board has officially approved the committee, underscoring the region's growing importance with the global trade finance ecosystem. The LARC will serve as a platform for fostering regional collaboration, driving innovation, and unlocking new opportunities in trade and structured finance. Sean Edwards, the ITFA Global Chair, emphasized the significance of this initiative. He said Latin America is a vital and growing market within the global trade finance landscape, and the establishment of LARC reflects the ITFA's dedication to expanding our reach and impact. We believe that through stronger regional collaboration and innovation financial solutions, we can help unlock the full potential of trade finance across Latin America. The newly established committee will be led by an esteemed group of industry professionals recognized as the founding board members of the LARC. These leaders represent key financial institutions and organizations across the region. And here you have listed the managing director of Cofine Trade Finance Solutions. You have the head of GPS, Trade Finance and LATAM of Bank of America, and you have Diego Consimo, the head of business development at the XDC Network. So you got the XDC Network sitting in with representatives, creating this new collaborative committee with Bank of America. That's huge, huge news. Again, more news that is super bullish for the space that has not been priced in yet. Going back to the very beginning of today's breakdown, Brad Garlinghouse saying on stage that there are a whole bunch of tailwinds supporting up the crypto market right now that have not been priced in, and people are underestimating what is about to happen. Just because of the short-term pullback that we're experiencing, it is honestly a mere blimp in what is about to take place over the next consecutive couple of years. Once all these positive developments and regulation materialize, people are honestly going to have their faces melted at believing that this market was dead, or in some bear market, or whatever the people believe on the internet retail space right now, because they're not reading documents like this. Okay. It goes on to talk about, why this is so important and whatnot. I thought that I'd just leave it there. Okay. So it just goes to show XDC Network collaborating with large financial institutions like Bank of America. I mean, that's huge. That's a massive statement right there. Okay. We are thrilled to officially launch the Latin America Regional Committee as a part of the ITFA's commitment to advancing trade finance in this dynamic region. With a strong leadership team in place, the LARC will drive new opportunities, foster collaboration, and ensure its efforts are fully in line with the ITFA's global objectives, said Hernan Mayol. Hernan Mayol is a board member of the ITFA and is the chair of the committee. All right. Moving on, last but not least, okay, we have this fundamental piece that was posted by Blueprint just 1 week ago that involves Aptos. Aptos, I personally hold in my portfolio, not financial advice, but I thought that I'd throw this one in there because it just goes to show ongoing developments that are taking place that are extremely bullish for this place, that's the space, that show regulatory compliance, DeFi developments, real world asset tokenization developments that are all recent and still not priced in yet. All right. So Blueprint, March 11th, 2025. The crypto disclosure platform Blueprint has partnered with Aptos Foundation, which is dedicated to supporting Aptos, a high-performance Layer 1 blockchain, to complete a groundbreaking integration enabling the automation and tokenization of Form Reg D filings. This marks the first time a U.S. securities law document has been placed on-chain along with its metadata, paving the way for seamless compliance in real-world assets, integration into DeFi ecosystems. Through its integration with Aptos, Blueprint provides users with the ability to create, tokenize, and store Form Reg D filings via decentralized infrastructure. As I mentioned, the infrastructure in crypto is evolving and scaling and is better now than it has ever been before. In addition to regulatory metadata, the platform supports pairing this compliance data with summarized asset information, expanding the functionality of tokenized real-world assets and enhancing their utility across DeFi markets. Regulation D is essential for U.S. securities offerings, simplifying capital raising by exempting private security offerings from registration and allowing unlimited funds to be raised efficiently. It preempts state laws enabling companies to secure over $1.5 trillion annually, surpassing public offerings. Then it goes on to talk about, once live, the architecture can support broader tokenization initiatives in the real-world asset space, including money market funds, real estate. If you guys remember what Paul Brody said about the real estate market, private credit, and much more. I'm telling you guys right now, like, it's so clear as day what's about to happen. And because of opinionated-based retail investors on the internet, a lot of people are about to get left behind and shaken out because they just truly don't understand the long-term vision and the longevity of this space that is being built out right now. So I'm going to give my throat and my voice a rest. I think that that's all that I have for you guys today. If you guys want to access any of the information that I shared with you all today, tap into our private CYPRX Discord. We would love to have you on the team. Hundreds of fundamental documents, panel discussions, PDFs from an institutional standpoint shared on a daily basis. You guys have direct centralized access to all of that information through our private Discord. Again, we'd love to have you on the team. Join a like-minded global community of interconnected individuals that all have the same thing in mind, and that is the longevity of this crypto space down the road. No bullish moonboy hopium or hype, institutional insights. You guys get direct access to some of the best indicators in the market via our institutional deltas. I cannot stress enough, now is the time to tap in. And if that doesn't interest you, again, you guys have access if you want to dive more in detail on how to learn DeFi, right, without deploying your hard-earned digital assets. We are literally doing that for you, having our hard-earned capital working for us, creating video breakdowns on how we're doing exactly that, earning passive rewards, generating yield on our digital assets actively now in the moment. If you guys want to see how we're doing that, head over to CYPRXtrading.com, tap into our Wealth 28 Club. That's all I have for you guys today. I really appreciate the love and the support. You guys, thank you so much for tapping in with us. 2,200 people representing here today. I really do appreciate you guys for coming out. Always trying to bring you guys the realest research, the realest information, non-biased, non-opinionated bullcrap, bullish moonboy hopium here, just straight research and facts. All right. And if that's what you guys like, if that's what you guys like hearing and listening into, then make sure that you're subscribed to the platform. If you're listening to this on YouTube, make sure that you follow us on X. I do appreciate the love and the support, and I'll see you guys in the next live. Everybody take it easy. Many blessings, and I'll see you all next time.